McCormick Limited, a public company following IFRS 16, recorded a right-of-use asset and lease liability at $150,000 on May 1st, 2020. The interest rate is 10%. McCormick made the first lease payment of $25,561 on May 1st, 2020. The lease requires a total of 8 annual payments. The equipment has a useful life of 8 years with no residual value. Prepare McCormick's December 31st, 2020 adjusting entries, round amounts to the nearest dollar. So in this situation, we have a company that signed a lease on May 1st, 2020. And now we're being asked not to record the journal entries on the inception of the lease, but rather to prepare the December 31st, 2020 adjusting entries. So let's look at what would be the journal entry on inception of the lease, because it might help us make sure we have the right numbers, right? So not required, but we're looking at this just to make sure we know what's going on. So when they recorded the lease, they had debit right of use asset. And it says that they recorded a right of use asset of $150,000. Then they would have had credit cash for the lease payment. So the lease payment is $25,561. And the other credit would be go to the lease liability, which is going to be the balancing figure, the right of use asset minus the cash. So we would have had a lease liability of $124,439. So now our December 31st, 2020 adjusting entries are going to be as follows. So we're going to have one entry, which is going to be to record interest expense on the lease liability. And the reason for this is because we need to accrete interest expense to recognize the present value on that lease liability. So we're going to have, how much of a lease liability are we going to have? We're going to have this 124, which is the carrying value of the lease liability. We know that the interest rate, it says the interest rate is 10%, okay? And we need to be careful about the period. So let's take this times the interest rate. Now this would be for a full period, but we really need to watch the periods in these leasing questions because you're going to find a lot of the times you're not going to be dealing with a 12-month period. So this lease was signed on May 1st, 2020, and now we're being asked for the December 31st entry. So we've got May, June, July, August, September, October, November, December. So we've got 8 months that we need to record these entries for. So we're going to need to take 8/12 and multiply this amount by 8/12, which is my calculation there. Okay, and that is going to give me this amount, $8,925, which if I round, it's $8,926 because we're asked in the question to round amounts to the nearest dollar. So I'm going to record debit lease expense, and this is going to go through my P&L. 8296, okay? And then I'm going to go credit lease liability. So we're actually increasing the value of the lease liability on our statement of financial position because of course it's a credit balance and we're crediting it. So we're increasing that lease liability. Now our second adjusting entry is going to be to record depreciation expense on the right of use asset. So we are going to say, now our right of use asset, remember up here was 150,000, and this lease is how many years? 8 payments. So it's going to be divided by 8 payments. So we're going to take this amount divided by 8. Okay. But remember, again, we've got this 8/12, right? Proration. So I'm going to take this number, which was 150,000 divided by 8. That's the annual depreciation. And I'm going to multiply it by this to say it's only going to be for 8 months, not 12 months. And that's going to give me $12,500. And I'm going to record debit, depreciation expense, 12,500. And I'm going to record credit. Remember, I'm not going to hit the right of use asset directly. I'm going to hit accumulated depreciation, right of use asset. And this is going to be for $12,500. So it's important to note that this hits an accumulated depreciation account. So we don't hit the right of use asset directly, but we do hit the lease liability directly. We don't have an accumulated depreciation account for that. And that's what your adjusting entries would look like. So again, I just want to highlight the importance of looking at this period. So making sure we're taking the right of use asset. So personally in this question, it asked us just to jump to the adjusting entries. I find it simpler to know what we have on our statement of financial position already, because this is the basis for the year-end entries. And then here we've taken the lease liability, we've multiplied it by the discount rate, which we've been told is 10%, which gave us this number. And all we did here was prorate it by 8 over 12 months, which gave us this amount, which is what we put into our journal entries. And here for depreciation expense, we took the right of use asset amount that we put on our statement of financial position initially. We said the lease was for 8 years, so we divided this the amount of a right of use asset by 8 years to come to our annual depreciation. And then we said, well, we're not going to book 12 months of depreciation because we've only had this asset, or we've only had this premises for 8 months. So therefore we prorated it by 8 over 12, and that gave us the 12,500 that we recognized as depreciation expense and accumulated depreciation, a right of use asset. So you can see we're decreasing the right of use asset through an accumulated depreciation account, of course, from a net book value perspective, and we're increasing the value of the lease liability each period, each year end.